Hey, what's going on, everybody? This is Sawcruhteez Streamz, and I am your host, Sawcruhteez. I sure appreciate everybody for taking the time to tune in today. There has definitely been a slight lull in the market over the last 24 hours, but there's still going to be plenty to talk about as there are a number of boundary lines that are being tested, and one of them is going to have to break sooner or later. And once that happens, I will absolutely be expecting a big move one way or the other. And people that have followed me for a while are starting to pick up on that theme that I am always trying to do my best to be prepared for when the market is primed for a big move one way or the other. And that helps me to kind of identify when real breakouts are happening compared to fake breakouts. It also provides great opportunities in terms of risk reward. Generally, the market will move the hardest following the longest periods of consolidation. When you've got a volatile market that's been consolidating for a while, that tells me that a big move is going to follow. And if it has been consolidating tightly for a while, that means that the stop loss should be pretty well defined, and it should be pretty tight in relation to the potential profit that is available. And again, I'm not the only person that has ever thought of this idea. There's a lot of people that think in this manner, so I don't want to make it seem like I'm unique in this perspective at all, because I'm not. And there are a number of other people that will talk about this and that are a lot better at this than myself, but it is one thing that I try to pay close attention to help give me a little bit of an edge over the people that I'm competing against. So hopefully that can help you guys to start to time your entries a little better. If you can time the entries right before major volatility occurs, then that will help to avoid whipsaw, and it will also help to not be in a position for too long that isn't moving anywhere. Even if you're not getting whipsawed, it's still a pain in the neck to hold on to a position that is just going nowhere for a prolonged period of time. So those are the main things that we're going to be talking about today. Before looking into the charts, I did want to thank everybody for the donations that were made to the GoFundMe campaign that I shared yesterday. And you guys remember I agreed to match 100% of the donations over the next 24 hours. The GoFundMe was at, I think, $205 yesterday, so we've had a big push and gotten over halfway to the goal, and that is very exciting. I really want to thank everybody who has taken the time to put some money in, and hopefully you don't mind me giving you some shout outs. We've got Pierre Grand Mason, Barbara Evans, David Dawson, MK, Kent Morgan, Kathleen Kirschbaum, Shirley Parker, Anonymous, and Enrique Canali. Thank you guys very, very much. This is very close to my heart, and you guys sending in whatever you sent in has count as double, as I have been matching those contributions as they have come in. So I am going to extend that for another 24 hours. I really do want to get up to the $2,000 goal. So for another 24 hours, anybody that takes the time to donate to Gabriel Harper's disabled daughter will be having that donation matched. And again, this is somebody who I met through Tyler Jenks' Hyperwave Telegram channel. We have gotten quite close since then, and it would really mean a lot to me if we can get this thing funded. So, okay, without any further ado, let's go ahead and pop up some charts. Okay, let's try to clean this up just a little bit. Always nice to start with the clean chart and kind of remark it up and make sure that you're still seeing the same things and that you're not really being too biased about the boundary lines that you have drawn. So yesterday we took a look at this potential symmetrical triangle, and sure enough, that is where the price found support, very much to my dismay. Let's see here. Okay, so just kind of noticed something that'll be interesting to talk about. So yeah, first thing I wanted to go over is that I was not expecting this to hold as support. I was really thinking that we were going to break down this area of support following this lower high, getting some sort of swing target in here connected to this lower high was making a lot of sense to me. My original target of 87.75 was too close to that price. Since, like I was talking about, the longer we've consolidated, the more I'm expecting a big move to follow. And the 87.75 target was not a target based on a big move following prolonged consolidation. That target was just simply basically a return back down to the bottom of this bear channel. So that's not a very major move. That's just pretty natural what we've been seeing in here. So if that boundary was to break down, I really was not going to be expecting 87.75 to provide much support outside of potentially a dead cat bounce, and I was just about ready to adjust my target to 8,000, 7,500 to 8,000 area for a number of reasons. Main reason being is that this is getting into a prolonged consolidation that's getting awfully tight, and once one of these boundary lines breaks, we should be in for a big move. And potentially we can use a pattern to help us determine with a little bit better idea of how big that move may be. Yesterday I looked at this. It made a lot of sense to connect this high because this trend line touched all of these points, so we might as well connect it up there. But I had a problem with using that to provide a price target because I really wanted this area to be part of the symmetrical triangle and then using that first pullback after this high as the area to measure the move, basically from here to here, and then extending that from whichever way this breaks. Now, oh sweet, I've got some water. Oh no. All right, well, you guys are just gonna have to hang tight for a second. I knew I was forgetting something. Sorry about that. Can't go a whole show without a drink of water, that's for darn sure. Okay. Maybe now that I'm not live I can edit that out, but I don't think I am going to bother taking the time to learn how to do that today. So sorry for that little delay, but back at it. So what I'm noticing today is that potentially this makes a lot of sense to me, is just kind of forget about this action here and use this as the symmetrical triangle. Just because this would connect doesn't necessarily mean that we have to extend it there as far as I'm concerned. And by connecting it right here, that alleviates this problem. We have the pullback from the top of the triangle. That first pullback gives us the bottom of this triangle. So this is definitely something I'm going to be paying very close attention to. Let's see what sort of target that may provide. We're looking at a $4,200 move. If we broke down here yesterday, is that correct? At 98.52. I should be able to do that in my head, but I'm not. So we've got 98.52 minus 4,200 gives us 56.52, which would make a lot of sense for some reason. So let me go ahead and write that down. Let's just put it up here. possible target from Symmetrical triangle is 56.52. Okay, so when I see something like that, before getting all excited and thinking that is going to occur, I want to look at higher time frames to see if there's some sort of confluence of higher time frames providing a similar area. And I said excited. I don't know if I'd be excited about this. I would really want price to find support before there, but then again would also want to be prepared if that doesn't happen. So we're going to go ahead and zoom out to see what other areas of support may be waiting at that area of 56.52. One thing that I really like using to find price targets is the visible range volume profile, which will illustrate volume at price. I am on BitMEX, which they've been the highest liquidity exchange over the last couple of years, so that is who I'd prefer when looking at this. You can pull up like a combination of 6 tickers doing like for all the different exchanges and then divide by 6, and it'll kind of average out the volume. And if I had the time, I would do that. That is definitely going to be the best way to do it. So first thing that is jumping out at me as this point of control, that is the red line on the visible range volume profile, which points out the single highest area of volume at a certain price. So 67.80 is the point of control based on how much volume occurred back in here, and then also, not really, just all back in here. Most volume at price. Therefore, this should be very, very strong support. I was expecting it to be very strong resistance on the way up and basically got burned on that action, but that just goes to show that, sometimes different indicators that are reliable will come up short when you're needing them the most, and in that situation it's probably going to cost you money, or at least some opportunity cost, and that is part of the cost of doing business. So you can't let it get to yourself too much, but you do want to keep it in mind where it's like, well, if that didn't act as resistance on the way up, am I going to be as confident as it acting as support on the way down? I would. If we do get back to this area, I would be very confident that price would support there. I would probably be buying heavy. So that kind of tells me that if this does break down, I want to keep an eye on this possible target from the symmetrical triangle. There is this gap, and gaps do tend to get filled, and the reason why this gap is here is because of how far we fell down here. Like, look, at this price from 45 to 56, we have spent very little time there. The less time you spend at a certain price, the less volume is going to be at that price almost always. So here we just rushed right through that area. Here we fell right through that area, and then here we smashed right back through. The most time we've spent there was really these kind of 3 weeks right here. That's the only time we consolidated in here, and gaps in volume profiles do tend to get filled. I'm not at all expecting that to happen, but it is something that jumps out at me as something to tuck away in the back of my mind. Pulling up I guess we can't look at a 200-week EMA on BitMEX, so let's try BLX. Interesting. Maybe I should look into the potential where the BLX is getting its volume from. The Bitcoin Liquid Index is an index of different exchanges that has the longest history as far as I know, but I never, for whatever reason, thought about using it as my primary ticker for determining, for analyzing volume. because this is painting a very different picture. And definitely, if you are to zoom out on any exchange, the point of control is going to be back in here. To bring up an old sore subject, this is definitely another main reason why I was expecting a return to 1,000. Having this enormous volume profile right here was something that was basically as important to me as anything else. So now let's just zoom in a little bit to get that out of there. And what we see here is actually really, really interesting and could potentially line up with that 56 target or so. So here's a gap that would make a lot more sense for it to somehow get filled. Again, I'm not expecting this at all, but I am starting to look down the long run. If we do, like, what's the worst case correction that we could have that maintains a long-term bull market? These are the types of things that you should be thinking about. And what's very important to me is, at what point would I consider this no longer a long-term bull market? There's a number of tools that I'd be using, but essentially, as long as we stay above where we bottomed here, then it would still be very much in a long-term bull market as far as I can tell from here. The 200 EMA on the weekly chart agrees. It's starting to move up, and as long as it moves up and the price supports above, that is a bull market. So when you do see price this far away from that EMA, it is something to pay attention to in terms of maybe a bigger correction could be coming than I originally thought. Seeing a gap in a volume profile in line with the 200-week EMA is something that is very interesting to me. I'm going to have to do a little more digging to see where the BLX is pulling its volume data from. I'm inclined to think it's probably the best one to use, but I will have to verify that. So let's go ahead and look at the daily. Seeing the 200-week EMA, 200-day EMA starting to move up right here. This looks like maybe it's not the best one to be using. Basically, notice how we didn't resist here. Like, basically, it hasn't worked really at all for a while. When was the last time this thing worked? Like back in here. And when I say worked, you want it to come all the way back and test for support before taking off. For example, if you're waiting for the 200-day EMA as a buying opportunity, you're kind of getting left out every time. And then if you're using it to sell, you're kind of getting screwed up in terms of it's either blasting right through or it's coming up short. So that's not working. And then right here we see that it looks like there should be an EMA that kind of fits, that would be a best fit for right in here. And clearly the 200 EMA is not really working. So let's go ahead and take a look at what else might be working a little better. 128 is often a decent option. I do change the color just so I know what I'm looking at. So this one's definitely working a lot better. Notice how it kind of caught the same one where the 200 did. They must have been basically in the same area. And then it caught this, and didn't work great here, but this was a tough time. Didn't work great here. At least it started catching in here, and now it's still not working. I mean, this thing has been moving at such a rate that it hasn't been able to return to certain EMAs that you would really expect it to. So let's just go ahead and throw on the 50, see what it's doing. Man, this thing really took a move through there, so that would maybe be like a 21. Let's try that. And I am using the 4-hour chart for the most part, and that's why the 50 and 200 are defaults for me there. When I go to another time frame, I've got to look and see if my EMAs need to be adjusted or not. And let's see here. So the 21 looks like it's working pretty good throughout here. And now notice how back in here, as soon as these started to flatten out, we took off, and it didn't allow these to roll over. 21 rolled over here, got a lower high, and it's rolled over again here. Watch for a cross with the 21 and the 50-day EMAs. That would be the first time that that's occurred. Basically, it signaled the bull entry back in here. And the last time we've really seen a sell signal from those EMAs were back in here. So definitely keep an eye on that. We notice kind of similar action back in here where it tries to flatten out and cross, fails to do so, takes off, tries to flatten out and cross, fails to do so, takes off, and then you get this turnover, lower high, turnover, and then boom. So I'm not at all suggesting that this is a fractal to here, but I am just trying to show how important it is to notice when these EMAs are rolling over for the first time after a prolonged trend. And really what I like for trend EMAs, I really like for support and resistance and signaling entries and using them for stop losses. For determining trend and reversals, I do tend to prefer simple moving averages because they give a much cleaner picture. Like this is what you want to see, this nice rollover, not that kind of doubling action like we saw in the EMAs that are too finicky sometimes. This is what we want to see for reversals. Come up and then this peak kind of, I don't even know what you'd call that, basically like a bell curve kind of situation, but not at all what a bell curve is illustrating. It's just kind of the same action that we see, where as long as this was trending up, we were in a long-term bull market, and then once that rolled over, long-term bear market, or at least you would say medium-term bear market, maybe wait for further confirmation, something like that. So that is definitely something I've been paying close attention to in terms of, let's go and get that out of there. Notice that nice rollover. So you have the roll up as the bull market starts, and really you'd want the roll over to be kind of the same proportion, like a sine wave, basically, like that. So potentially we could be in for more kind of sideways consolidation action while that happens, or potentially it's going to resist doing that and take off back to the upside. But this is the first time that we've seen the 50-day moving average moving down since January 2019. Something to pay very close attention to. Notice how sometimes these little things end up getting taken out. Like here we've got a bear market that it looks like it's now turning back up, but it doesn't do it. That maybe is what we're seeing here when I said that I want the same proportions of like a sine wave. Here we're really not getting that. It may be more something like this, where it's just a bit of a head fake before the trend continues. So pay very, very close attention to that. Notice how it tried to flatten out, and now it might be turning back down. That could definitely change throughout the day. So something I will be paying close attention to. And we were trying to find potential other targets that could be in line with that symmetrical triangle, because that is so much different from anything I've been expecting. I've really been looking 7,500 as my main kind of bottom, like where I'd really, really want to buy. And now seeing this big symmetrical triangle that could be providing a target of 56.52 is something that is really jumping out at me, and something that I really do want to examine more, because pattern targets are extremely important to me and I find them very reliable. So the visible range and the let's see, and the exponential moving average on the weekly and the dailies are suggesting that we should not get down to 56.52. This symmetrical triangle is the only thing that is suggesting that. So perhaps the target would make most sense if it breaks to the upside, and I generally will take the target regardless of which way it breaks. But in this situation, if this pattern breaks to the upside, I would have a significant degree of confidence in this target being reached. Let's say 4,200 plus 11.5 approximately would be about 15.7 or so. Roughly 15,700 if break to upside. So that would make a lot of sense, and I'd have no problem taking that target. So that is very rare that I would have no problem taking a target in one direction, but I would in the other direction. So that is kind of interesting, maybe something to think about more. Maybe I should have that perspective more often because we're in a bull market. If we confirm a pattern to the upside, it would absolutely be more likely to reach that target than if we broke it to the downside in a long-term bull market where there's all this support down here from the moving averages and prior horizontals and yada, yada, yada. So that is interesting and gives me something to think about that potentially I should have a much higher degree of confidence for pattern targets when it's in line with the long-term trend. Definitely makes a lot of sense. So let's go ahead and see what I'm looking at now is the that sort of right here as my do or die zone. The 6,500 is really where I would not want to see any correction fall below. And ideally, the higher it finds support, the more bullish it is. So if we find support here, I mean, that's way more bullish than, you know, what I was looking at originally in here. So I am going to shy away from this target to the downside of 56.52, even if we do break this down. And then if we do break it to the upside, I will have no problem going ahead to take that target. So yesterday we looked at a potential Bulkowski big W in the stock market. And potentially we could be seeing something like that right here, where it's something along these lines here. And then maybe like a throwback to give us the handle, something like this. And then something like that, where you measure here to here and put that on the neckline. So way ahead of myself here for sure. I understand that, but this is what I am starting to see and something that I do want to be aware of. I did have an alert to let me know if price was breaking above 10,863, and now I kind of want to adjust that to 10,971. Because if we cross that area, I don't need to have it set to closing. We can just have it crossing above that area because crossing above that area would confirm the big W pattern and would provide a target of 12,162 or so. And that is something that I need to be very aware of, being that I'm currently short this market and was expecting this to break down last night. So let's see why I say that. All right, so we had right in here this close below, this was all the way down at 98.55, and we were well below these SARs, which tells me there's plenty of room to go. When the SARs get high and tight, it indicates exhaustion of a trend and that a reversal or a short-term correction is on the horizon. But when you're moving and you're far away from these SARs, it suggests that there's still plenty of room left to go in this trend. So here we have plenty of room left to go in the trend based on the parabolic SARs as we're coming back to test this boundary after getting a significant signal of weakness from the lower high here. So all of that told me that most likely we're going to break this down. And if we do, I mean, I was really expecting to wake up to $9,000 Bitcoin this morning, because if we broke that down, it was going to move hard, I'm certain, unless it was just a fake that ended up spiking sharply in the other way. So the other reason why I was expecting this to break down is because of the average directional index. And man, I need to get this thing. Let's go ahead and do it now so that I don't have to adjust that every single time, and also so that you guys can see which ones I use. So type in ADX and DI, and I use the one with 26,000 likes. It's very easy to find just looking down because none of the other ones have that many. And now they're thick lines because I set that as default, but I had never offloaded it and uploaded it. Okay, so right as the parabolic SARs are telling me there's plenty of room to go, and we're getting ready to test this threshold, the ADX is starting to move up and starting to cross 20. So right here, as I said, we've got that low close. I mean, I'm really thinking that this thing is ready to break down due to the parabolic SARs, as well as confirmation from the other Wells Wilder indicators. Right here, we cross 20, and look at the selling pressure start to show signs of diverging. That's what you want. That's like almost a perfect setup where you're coming to a boundary line, you're crossing 20, and you've got the DIs diverging in the direction that it looks like it's going to break down. I mean, that had it all. Price far away from the SARs, ADX crossing 20, DIs diverging. But then again, this is exactly what happens in Bitcoin, just time and time and time and time again. Once you think you've got a really good trade on the table, or you think you know where it's going with a high degree of certainty, that is exactly when some sort of trap happens that just is so much more prevalent in Bitcoin than anywhere else, that really makes you wonder what's going on right here, that what may have happened right here. It sure didn't seem very natural to me, because we've got everything showing that this thing is ready to break this to the downside, but that just is up to the individual to decide whether or not your indicators didn't work, or whether or not there was some big money trader, some whale who came in and decided to wipe out a bunch of stop losses that were maybe set in here or so. But this is something that I definitely still was prepared for, or one of the scenarios I outlined yesterday was this potential for getting a head and shoulders. And that could be what's happening as we speak, which, let's see here, would be quite interesting. So that is what I was looking at once we did go ahead and find support after this low close. Now I'm wondering, oh boy, is that the trap? Is now it gonna, are we running back to the upside? This is where I want to be keeping my eye. If we do break through this resistance area, then head and shoulders will no longer be intact. It's already kind of funky due to this action, but still quite all right as far as I'm concerned. And potentially that would be the better target to use. If this does end up confirming to the downside, I think this would be the pattern that I would prefer to use to measure the move. 32.41, that would be minus about 98.50. 3241. That would give 6609. I like that a lot, based on what we're seeing from the higher time frames. So that is what I'm seeing now, and now what I'm watching for basically are these DIs. Is it, perhaps this is entirely natural action happening right here where supply simply dried up and demand started increasing. Spend months above 5 figures and then fall below that area, sellers are going to get less enthusiastic about selling, buyers are going to get more enthusiastic about buying, and that's kind of what we see right in here. What's interesting is how the ADX has continued to move upwards. I wouldn't really expect to see that since we are still trapped in this range. I would have expected this to start to roll back over when we failed to break down this boundary. So that is kind of interesting, kind of bit of a head scratcher there. Let's see if there is anything else that I wanted to cover. I do not think so. One thing that I was kind of dismayed about a little bit was breaking this SAR to the upside on the 4-hour chart. I was hoping after this thing found support and we started to reverse, I really was hoping that that would hold as resistance and mow it on over. That will often happen where you're spread out from the SARs, you have a consolidation or a counter trend move, and then once it gets to the SARs, it just kind of gets mowed over. Didn't happen. We broke through, so now I'm definitely going to be paying close attention to a potential another higher low and a potential big W. Remembered the one other thing that I wanted to talk to you about, which is kind of a chart that I tweeted yesterday that was a little bit in jest, but also not entirely. And that is this pattern that I've actually seen numerous times in numerous different markets that maybe I'm going to have to start labeling it because it does seem to be providing some good information and could potentially be the most important boundary that is out there. And just because it's not coming from a traditional pattern doesn't necessarily mean that I need to disregard it. So let's see what we got here. I think I remember what I did now. I think it'd be like a 12-hour. So yesterday we did look at that guy. And then what I started to look at was this kind of like little fishy guy. Let's see how I did it. Don't remember exactly how I did it, but I think, yeah, probably that wick there. Okay, so that makes a lot of sense to me as the actual predominant market pattern above and beyond everything else. Now I know that this looks a little goofy and is something that is just kind of very unique, but just look at how important these boundary lines are. Like there's a number of patterns that don't fit quite right. The trend, the bearish channel, the parallel bear channel quit working right in here because of this higher low. I've seen some people labeling it a descending triangle. That does kind of make sense, but there isn't a horizontal boundary that has more than 2 touch points. So you really have to be awful generous kind of chopping all of this out to make yourself in a descending triangle, or just kind of putting it down here. I don't like either. The symmetrical triangle is starting to make a lot of sense, especially if using this touch point. But now it leaves out all of this action over here. The Wyckoff accumulation, the most it makes sense is from like a very bearish perspective, in my opinion, in that it doesn't make sense over in here. This should have gotten back up to here for it to be a Wyckoff as far as I am concerned. And since it did pull up way down here, that's a very significant signal of weakness in terms of now we have this downward trend line, and Wyckoffs are almost always in this horizontal zone. So this pattern is one that I want to say maybe the best way to identify the current range that we're trading in. And this is something that will occur in parabolic markets, basically where If this takes off to the upside, we have ourselves a nice base for another parabola. And then notice the the supply has been increasing and moving down in its own parabolic fashion. Which again is something that I've seen in gold. I've seen it at the S&P 500, and I've seen it in crypto more than anything else. So this is something that I will be paying very close attention to and watching for this to get violated. And actually, I may have drawn it like this yesterday, something like that. I think I did, yeah. I think this is how I was drawing it. So that's the one thing I really don't like about parabolas is to me they're even more subjective than trend lines and harder to repeat. Now that we have this higher low, I think you would have to adjust it downwards because that higher low is kind of fitting right in line with this best fit. So I would probably go ahead and adjust that based on this higher low, but even if I didn't, kind of what I would be looking at probably is this was how I originally had it drawn, and it looks like it got broken down here. So now what I will be watching for is this to hold as support, because I'm not real, or excuse me, I'm sorry, this top one to hold as resistance. As we're moving sideways or up, I would be expecting the supply to continue moving down along this curve. And if it does break through this one here, then we would do something like that, and we would say that this must still be intact, and therefore we're going to use this as the best fit line. And if we can break through here, I am going to be inclined to start becoming neutral to bullish, opposed to firmly happy about being bearish. So that is the last thing that I believe I wanted to go over. Yep, I think that is it. I appreciate everybody for taking the time to tune in. Keep your eye on this Jesus fish pattern that looks like it could be really the most important structure that the market is taking on. That tells me that my initial read is correct in that the market has been consolidating into a tight range, and once that consolidation is over, a big move is to be expected, and potentially these two lines are the best way to understand the following move. If we break through the top of this, then a parabolic move to the upside seems highly likely. If we continue to find resistance below the top boundary, then a big dump off does seem likely, and that is what I would be expecting the sort of 65 to 75 as the most likely bottom if this is where, if this thing continues to hold as resistance. And right here, let's see, August 26th, so we've got about 4 days for this to come to a head. So we could potentially continue this very quiet consolidation for another 4 days, which I think would make sense for the head and shoulders on the 4-hour chart. So don't be too impatient just yet, and but also be paying very close attention, because once one of these gives way, I do think that the either the bears or the bulls will take over in a big way and cause for a very, very sharp reaction. Let's see, there was one chart I found very interesting that I wanted to share from Jacob Canfield on Twitter. Just his chart for when to buy Bitcoin in a bullish trend, and he uses indicators that I really like, so that's kind of why it caught my eye, just in terms of looking for the 21-week EMA as support or resistance, and using the RSI to confirm those entries. Bullish RSI, price testing 21-week EMA is a buy signal. bearish RSI with price testing 21-week EMA is a sell signal. So very much in line with how I like to look at the charts. Keep an eye on that. Potentially finding support at the 21-week EMA with this RSI remaining above 54. If we do test that and the RSI falls below 54, then that could put us in a trend transition, which would be very significant. So thank you, Jacob, for posting that. And last thing is the GoFundMe campaign for my friend Gabriel Harper. He's got a couple days left to raise money that would give him the ability to find his daughter an alternative school after she got kicked out of her private school for behavioral reasons. She is severely autistic and is in need of much more help than the average autistic person, and that is why she was asked to leave. And now it's up to Gabriel to find an alternative, and he only has a couple weeks to make it happen before his daughter would become truant and he would be forced to enroll her into public schools, which doesn't have nearly the facilities that the private school has that she is now leaving. So that is absolutely the worst case scenario. He's asking for a couple grand to so he can just take a couple weeks off of his job, about 3 weeks, and go through all of the diligence and jump through all the hoops that would be needed to make sure that she gets put in the best care possible. So I'm really hoping to achieve this goal, and I am going to be matching every donation. I agreed yesterday for 24 hours. I will be extending that. We got about halfway there. I'll give it another 24 hours. Let's knock this thing out. It would make me feel great. And thank you everybody for who has already supported by sending in some donations. Every little bit goes a very long way. Every dollar you contribute will count as $2 because I am going to be matching for the next 24 hours. So thank you guys very much for tuning in. This was pre-recorded, still banging my head against the wall trying to figure out the YouTube beta version of live streaming. Quite honestly, about ready to give up and move the live streaming over to Twitch and just do recordings to YouTube, which it looks like if I go an hour, it will take at least 2 hours to upload. So sometimes it won't get to you maybe in time, but for the most part, I do think that the time frames that I'm looking at will be conducive to uploading, 2 hours after talking about it. So thank you all very much for tuning in. Last thing I wanted to say is that since I'm not doing live streams, definitely feel free to leave comments. I will do my best to get back to them as long as there aren't too many or anything, and especially if there's good questions, I will do my best to respond to those. Since I'm not in the live stream, that's the main thing I'll be missing out on is the feedback and the questions from the audience. So if you guys just want to use the regular comment section, I will be keeping my eye on that. And without any further ado, you all have a great afternoon, evening, morning, wherever you are in the world, and I will plan on catching up with you tomorrow.